Hi everyone, welcome to our episode on the Standard & Poor's 500, or simply the S&P 500, which is an index containing 500 of the largest publicly traded companies in the United States. Companies in the index must be listed on either the New York Stock Exchange or NASDAQ stock market. In total, the index accounts for approximately 80% of all U.S. stock. The index is weighted by market capitalization, which, remember from episode 2, is simply the number of shares outstanding multiplied by the current share price. Companies must meet additional criteria, such as liquidity-based requirements and minimum monthly trading volume to be included, so the index does not necessarily include the exact 500 largest companies. For example, Tesla was not included until December of 2020 and entered the index as one of the most valuable companies to ever be added to the index. What would eventually become the S&P 500 formed in 1926. It contained 90 stocks and was known as the Composite Index. This officially became the S&P 500 on March 4th of 1957, and since then has had an average annual return of approximately 10%. The S&P 500 is a widely regarded benchmark of large U.S. equities and an indicator for the health of the U.S. economy as a whole. Numerous funds exist with the purpose of tracking the S&P 500 index. BlackRock and Vanguard, the world's largest and second largest asset managers respectively, each have several funds that track the S&P 500 in some fashion. For government employees with the Thrift Savings Plan, or TSP, the C Fund tracks the S&P 500 index. Regardless of your brokerage firm or trading platform, you may choose to invest in a fund that tracks the S&P 500. Warren Buffett has continually touted the benefits of low-cost S&P 500 index funds and recommends it to investors. In fact, he values the S&P 500 so greatly that he instructed his trustee to place 90% of his money into an S&P 500 index after he dies. The two S&P 500 index funds that Berkshire Hathaway has invested in are VOO and SPY. In the video notes are several links to resources where you can learn more about the index and explore S&P Global, the company that oversees and determines the components of the S&P 500 index. In summary, the S&P 500 is an index of 500 of the largest publicly traded companies in the United States. Companies must meet several criteria to be included in the index, such as size, trading volume, and liquidity. Since 1957, the index's average annualized return is approximately 10%, and the S&P 500 index funds are a passive investment strategy that allows you to grow your capital alongside the growth of the U.S. economy. Next up, we learn about industries, sectors, and how companies are classified in the stock market. See you there.